What's up, guys? Welcome back. Today we're going to do a breakdown of in backtesting, basically one of the last trades that WWA posted on their Instagram. Again, I like doing this because it helps me as well, just to see what they were thinking, exactly what they were doing and their logic behind it. But at the same time, I think that the years that I have, the 5 years that I have trading, can help you figure out how to backtest it and how they go about entering trades if you don't have the funds to enter their course. And so, yeah, that's the whole purpose of this. So let's break this one down, guys. Their stop was up here, actually, just above that wick. Okay, cool. Yeah, so this is what the trade was on GU shorts. And yeah, let's go into it. So basically, let's start out from the daily. Obviously, clearly trending down on the daily, right? You can see that if we just mark out the structural points here, we have a high, we have a low, high, lower low, high, low. And so this is all in this degree, right? You can see that these waves are relatively similar in length and size. And so you're going to get a similar length pullbacks, right? Essentially. And so now you get this pullback right up to where the extreme of the last significant point in structure. So obviously you want to be looking for sells here. You definitely don't want to be looking for buys here, because what do we have here? We have this clear, see this big candle down, and there was a clear order block here. Everyone and their mom's dog were shorting it here. I can guarantee it. So this is going to be used as inducement to what? This little imbalance here in this order block here. You can also see that after mitigating off of this level up here for the last structural level, which had the exact same thing, right? Inducement here. And last point of interest, basically you can just mark out this whole thing and then refine it, right? You have that there. You can see the last point that this touched off of. Well, what was the first structure break? Right here. Sweep right there, break a structure right here. Okay. This candle, this last up candle, and then the down move, this led to this break in structure. So this is going to be a very significant zone. I'm just going to mark out the bodies here, the body up to the wick, because that's typically, they typically do mitigate the bodies. But anyways, you can see that. So that induced this POI. And so therefore we should get some sort of reaction from here. And you can see here, this came up very, very inefficiently with a nice clean leg. So the first level, really, that price was efficient, was right here at this little hidden order block there. Okay. And yeah, excuse my dog. He goes a little insane sometimes. So let's go 4 hour. What do we see? Can we refine it a little bit more? Not really much that I would see. Again, you can put it up to here if you want, but again, see how just refining it just down to the 4 hour does that. And so we're in our zone. So what I typically do in this case is I just mark them out. Like I mark it out like that, just to know that it could get up to there. But we are at a higher time frame key level, right? And there's going to be liquidity pent up there, so we'll probably get some sort of reaction there. So yeah, that's what I would do there. And you can see, yeah, right here, we have some nice equal lows right there. And this was the trade that they were looking at from up in here. So we had some equal lows to target. What else do we have? Let's go in the 1 hour. Maybe there was another something that we could have seen here. Okay, this is what I'm saying. This is beautiful. Look what we have here. Okay, we have sweep on structure. So consolidation, sweep on structure, kind of made this equal lows here, broke through. So now this is going to be the inducement, right? Because if people are going to be looking for shorts here, when it comes back up, because it's support and resistance, what's it going to do? It's going to absolutely rinse those. So all of the sell or the orders should technically be in this leg, right? Because this is the one that came up and swept structure, and then we came down. So what we can do is you can either use the wick or the body. The bodies are really where the volume is going to be at. But let's just use the wicks, just because obviously we don't want to over refine. And then we'll just mark out this right here, because this whole thing is really the last candle that really did break through that. Okay, so let's mark it like that. And let's go over. And look at that, right? Boom. Precision. Almost to the pip, probably to the pip actually. So what we can see here clearly on the 1 hour is we actually have a 1 hour sweep here and then a 1 hour break in structure right here. And again, very similar to what just happened there. We have these, oh, 1 second here. We have these relatively like this support level. So people are probably just going to be entering right off of here. Where was that last move that went up? Boom. This is the one that swept it. That was one of them. But then as you can see, it happened again. It went up one more time. Okay. Now, something super interesting here, didn't mean to change that again, is that now that we broke structure, where's the extreme point of interest? Well, it's going to be right up here, right? And let me just actually just take this off because now we know that this is our point of interest up in there. Or what I can do, actually is just drag it like that and drag it like that. Shouldn't break above this level. Okay, cool. So we tag off that, easy peasy. Now let's look at structure here, okay? So we had high, a low, a high, a low, a high, broken structure. So now low, and now this whole thing is going to be our trading range. Something interesting though is that right here we had a failure to create a higher high right here. So this was a failure. As soon as we break this, now we have, this is what ICT refers to as a mitigation block here. And so we have breakdown, mitigation block, and then down. It goes deep into it. It goes up to the extreme of it actually. And now you might be saying to yourself, oh, Matt, these are equal highs. And something that you can look at is just looking at divergence to confirm. So something like this, for example, with the dollar index, and with this is a TDI or RSI, whatever. It doesn't really matter, honestly. Same thing. You can see, right? Lower high right here. We have a high here, a lower high there, low here, lower low. These should be going in different directions, right? If because dollar index is the dollar, so it's going to be the it should be basically directly negatively correlated with this pair, but you can see that we're actually in a state of correlation, or there's a crack in correlation, sorry. And so what ends up happening there is it breaks structure. And so that's a good one. Additionally, you can also see it right here where you have another down on the dollar index and also another down with the highs on the on GU. So super interesting. Again, that's just an extra added confluence. And you can see here, again, we have a high here and entering that POI. And then on the TDI here, you can see we have a lower high. So that's the divergence there. Again, excuse my dog, guys. Okay, so that's basically it. That can be your confirmation. Again, if I was looking for shorts, just be looking for it up into the extreme of this point. You can see that really this is the last up candle right there on the 1 hour. So we bounced off of our key level. Now we have that on the 1 hour, and we're inducing it right here. Okay, we're inducing it right there. Let's go down to the intraday timeframes here. Now that we know, you can see there's divergence right here. So this is going to be our high of interest right there. We have a little inducement right here as well. Inducement here. And you can see basically, I believe they got in right here. Let's see, actually, on the 15-minute, and their stop was above the last 15-minute candle. Where is it? So they got in here, and their stop was above here somewhere, I believe. So let me just mark it out right there. That's where they got in. I'm assuming, right? Let's see. Oh, story is no longer available. Okay, well, whatever. Should be. Oh no, because they ran out. Okay, no worries. That's fine. So it was around right here where they got in here. Wow, luckily I did this right now. So there's a little divergence right there, and then break in structure. Now we had this whole price swing, basically the price swing that we're in. We see Asia. Look what happens. Frankfurt open rallies to break the high. You could be anticipating that this is going to be going down potentially from here. However, we didn't mitigate out of our POI, and also the timing. Look what happens at. So this was Frankfurt, came back down, mitigated where Asian range 50%. So the Asian midline. There's a nice order block right there. Boom, breaks up, comes back up in here. And now this is where we're looking for shorts. Again, to confirm, I think that they use divergence a lot in their trading. And you can see here, look at this, boom, divergence, okay, boom, divergence. So that can be confirming this POI. And so now you can look for lower time frame entries on it essentially, okay? And again, where are we going to be looking to target? Well, first of all, we have to see, we have equal lows here. So this is going to be the major liquidity pool of the day, what I would be assuming, okay? And it was the exact same thing on Euro US dollar that you can go watch the reviews of the past week. The past week was really good. At the end of the week, I was struggling in the beginning of the week, to be honest, with getting the right direction there, but eventually got it and we smashed the last couple of days. Anyways, you can see big liquidity pooling, big liquidity pool right here, equal lows structure point. And then what do we have here? We have this massive imbalance. Okay, so let's just mark that out. And then if we go here, and again, I already set this up so I don't have to waste time doing it. You can check out the link right there. Forex volatility calculator. Basically, it shows the average daily range over the past. I just put in 1 week because it's the most relevant data. So you click calculate, then it calculates it for you. So if I go and find GU right here, you can see average daily range is about 77 pips. Okay, so 77 pips. If this was the high of the day, remember, this is Asia, right? High of the day comes in typically in London. And so if that's the case, if this is going to be the high of the day, what's 77 pips, right? So anywhere below into this imbalance is going to be a good area to target. You can see there's a nice inducement here as well. And then there's probably going to be some smaller time frame level within this that we can refine down to. So let's go down to the 5 minute. Okay, let's see. Look at this. So yeah, under that imbalance, again, you don't have to try and catch the whole daily range, right? What you want to do is you want to catch maybe 70%, 80%, like that can be a good target, right? Because it's not always going to get there. It's the average. Sometimes it's going to go beyond that. Sometimes it's going to fall below that. But if you can target, or if you can target at least, 70% of the average daily range, that's going to happen. It's going to run that many pips in a day. Typically, like 99% of the days, right? 95% of the days, you're probably going to run around 70% of the average daily range. So it's a good target to go for. But you can see there's a nice confluence there at the 50% of that imbalance. And look at that. That's exactly where price ended off the day at. Okay. So here's your sweep. Here's your sweep again into that POI. You can see here, right? We mitigated right there. We had a nice sweep on. Let me just get rid of this for a second. We had break a or sweep there. And then you can say break a structure. The main one was right here. Okay. And so what happens? We get induced with this one. This one was really inducing this level, in my opinion, like anywhere into here. Okay. Or this whole thing, this whole block. You can see we got a nice little reaction off of it. And then, but see, there's a little bit of imbalance. And so this point was inducing the extreme level right here. And you can see that's exactly what got tagged. And then we went down. And we just put on a refinement there. Sorry. Oh, wrong one. Okay. So that's what happened there. And then we had the same thing kind of happen basically right here, right? We had essentially Asian high inducing what? Inducing the nearest POI, right? We want to look at the nearest POI to the inducement because that's going to be the closest in proximity. That's what is going to be induced. So you can see it right here. Boom, induces it. You can see a nice break of structure, breaks back down. This was the Asian midline order block here. You can see respects that nicely. And then we start getting some upside move. Well, now, once you start seeing that potentially, okay, well, first of all, we have this V-shaped recovery after doing that. That's not something I want to see. I want to see something like this. You see how it goes like this? We have our sweep, break a structure, come back down. And now we create these like, sure, it's high resistance liquidity, but this is like a corrective structure coming back up where we have these two hits and then up and then down. Whereas opposed, I just don't like taking these ones. Now, the only reason why this one was relatively decent is you see these two equal lows right here. So eventually those are going to get targeted. They don't have to get targeted right away though. And so, yeah, you can see it right here. Easily gets up into that zone, bangs down into that Asian midline order block, and then rallies back up. Again, look at the timing, right? 3 a.m. sweep, 3 a.m. sweep, boom, comes right back into that level. Can we refine it in any way? Well, again, you don't want to be over refining, because then you're just going to be, if you miss something, you're going to be like, oh, it didn't get up to that level. And so you were, instead of reacting, you were kind of just waiting for price to get up to a certain price point. For me, what I would just be looking at is, you see this little imbalance here. I'd be looking at this. I just mark it out within this higher, this bigger POI. Sorry, I accidentally deleted that. But you can see this little imbalance there. Doesn't have to fill entirely, right? It can just dabble into it, especially because there's a nice, and here I'll move it right here. Okay, there's a nice order block right here, the last up candles before the down move. Okay, so last up candles before the down move, boom, we left a little imbalance, never mitigated it, boom, mitigated it right there. Now what ends up happening is we have a sweep here, we have a sweep here, and then we have an imbalance fill there, and then we break structure on the 5. Okay, so this is beautiful, timing is right, everything is right here. So let me just mark out this 5-minute order block right here. Just going to be using the bodies because that's where the bulk of the volume is. And you can see we respect that, Now they entered off of this candle, okay, off of the, during this candle. So let's see, right? Let's go down to the 1 minute here. So this can actually, you can see at the 50%. So we have this level right here. Again, immediately respected, okay, respected. But look at this, like I said before, right? We get these 2 lows. This is used as an inducement, and then it comes up higher, okay? So now this to me is a valid, is a valid setup. So I'm just gonna take this off and just mark off the refined order block right up here, okay? And we'll just drag this over so it doesn't confuse us, like this. Okay, so you can see here, we have another sweep on structure. So now we have multiple sweeps on the structure from the higher time frame down to the 1 minute. We have a break in structure right here. Boom. We have 1, 2. So we have this kind of accumulation right here. So this is going to be inducing, essentially, inducing, or providing the liquidity to sponsor the nearest POI. Where's the nearest POI? Well, it's going to be this one right here, right? And so that's what happens. So this was actually a really good trade. I don't know why they didn't take this one. I would have definitely taken this one if I saw it, just because we have this clear trend building. It's the perfect timing. Everything was right. We have these equal lows to target. So I don't know why they didn't take that one, to be totally honest with you. Maybe they just weren't on the computer or whatever. They were waiting for extra confluence. But ultimately, this one was a really good setup after mitigating off of that zone. But maybe they wanted to wait for the higher time frame break of structure, which was right here, right? I believe this was the 5 minute, break of structure. So we'll just mark that out. And then there was the 5 minute sweep right here, but we won't even have to mark that. So if that was the case, well, then let's just look at how order flow was developing here. Okay, let me just take this out. Let's do 1 minute order flow. So we have 1 minute high, low, high. Then now we have the break in structure. So now we have a high, we have a low, right? This one broke this low. We have a high, we have a low. And now this broke 5 minute structure. So here we go. Sorry, I just wanted to mark that out nice and cleanly. And you can see here, what did we get? We had a sweep on structure right here. We had a break on structure right there. Okay, super easy. Now, price came back down again, does that consolidation type move. It does provide higher time or high resistance liquidity, just like this one does. And just like, where was it again? I think it was on the bottom. Anyways, and just like those all, they all do that. Like, it's the ones that you got to be aware of, that you got to watch out for, is when it goes like this, consolidation, sweep, and it goes like this. These ones are a little bit sketchy. The only way I would trade this is if this is one big candle, or like just like 2 big candles, because it's just running inefficiently to take out some sort of high here and then go into the extreme. That's the only way I would take this one. But these ones are a little higher risk for sure. What I like to see is something like this. Like that. Okay, because then this shows is consolidating just like how it was consolidating here. We just manipulated and then down, just like, again, just in my other videos, I say exactly like what ICT says, where you have your accumulation, manipulation, distribution. It's the same thing, accumulation, manipulation, distribution. So you want to catch that manipulation into that order block and then down, okay? And so that's what this is, right? Accumulation, manipulation, distribution. And so that's basically the game that you're playing. And so right here, we can basically, first of all, this is the higher time frame order block, or sorry, this is the refinement. And so if you want to just trade the higher time frame order block, you can see that it lines, sorry, was it 5 minute? Let's see. Right here. So you can see that it's just that extra layer of confluence at that level that you're like, okay, yeah, I can definitely take a trade from right here. You can see we had this very inefficient move down. We have this price right here inducing it. Well, what are we inducing? Well, there's definitely an imbalance flow right there that, again, you could have taken that, but I believe what they did is they just took the last, see how this candle was the one that swept, the one that swept structure, or sorry, swept liquidity and mitigated. This was the one that mitigated the previous high right here. Okay. I think essentially what they did was they just took it right off of this. They saw, look at, and this is what I'm saying. See how clean this leg comes up? It's just like a bunch of bullish candles. All that is a order block on a higher time frame, right? If I just move it like this, you can see as soon as we break, we mitigate that 50% and then go. But essentially, what you could have done is just taken it right off of here. Again, if you wanted to take it right about right here, you could have done that as well and just put your stop above there. Personally, where's the last 15-minute candle? They put their stop above this one, I believe, this candle. So the entry was somewhere around here and their stop was somewhere around here. Okay. So let's go back to it and let's see how it makes sense with the basic structure. So we have a lot of confluence in and around this level here. You can see right above that inducement, this one right here, there's another inducement right here. Right? Not only that, you can see that there's this trend line. So maybe people's stops were just above it, something like that, and then it got swept and then it broke back down into it. So maybe we were using that as confluence as well. I'm not too sure. But ultimately that's the trade, really. They entered basically from that inducement, stop above. This was that last 15-minute candle, or this was the last 15-minute candle. This was the second last 15-minute candle. I believe they used the second last 15-minute candle right there, just as an extra confluence, right? Like their stop has two areas that it needs to get through. It needs to get through here and it needs to get through there, which is very improbable, right? So I think that's why they put their stops there. Anyways, again, where's your target? Well, as soon as it breaks structure, I mean, this is going to be your first target for me. That's what I would be anticipating. Additionally, we have Asian lows right here, which is going to be a huge liquidity pool, huge target. And what I can see just below Asian liquidity pool are these equal lows. And then we have this here. We have a sweep on structure, right? Or sorry, a sweep on liquidity, break a structure right there. Okay. And that being said, we have this unmitigated block right there. This whole unmitigated block. Okay. So this would be probably an area that I would be looking at taking out my position, part of it at least. And you can see that it dabbles right into it right there. News event comes in. And also this is beautiful right here too, right? We got a sweep right there, break in structure. Well, you can say that this was the break in structure, but if that's not clear, then obviously you can see this. You should be able to see this, where we had consolidation, sweep, break back down. This was the low. If not, I like this one personally, just because you can see these 1, 2, 3. This is just an order block on a higher time frame. So again, let's just mark that out there. If you wanted to get in a trade, then this would be beautiful. But the reason why it would be a lower probability trade is because obviously there's equal lows here, but we already swept Asian liquidity, whereas this one is beautiful high probability because nothing was even swept yet, right? We swept to the upside, we had timing right, we had everything right, structure was right from a higher time frame POI, and then we had equal lows here, we had Asian lows here, and we had an unmitigated order block right there. So there's a lot of confluence there, and you can see clear trend line, right? Clear trend line, just developing, enticing buyers to enter the market. They get absolutely like swept, and then price keeps going. But you can see that this is where it happened, right? We mitigate price here, use this as an inducement, and then it continues down. So 5 minute, let's just go back quick. Again, where are we going to be targeting down here for our lower time frame? Maybe you can be targeting these equal lows. And then ultimately, if you want to catch the majority of the daily range, it's going to be right down to about here or right down to here. And again, if you're holding for the long term, we know, right? We marked it out that there was this, what is it? This hidden base right there, right? So you can be targeting down there as well. Okay, you can be targeting down here as well. And then if that breaks, really, I mean, you have this, right? This is the structure, this structural swing point. So realistically, you could be holding and targeting there, and that's how you get those aggressive RRs, right? It depends what style trading, what style trader you are, but it totally makes sense that they would be holding this, because I know that they're scalping into swing traders. Eventually, like essentially they take scalp entries, but hold them for swings. And that's the next logical area, right? That you would be looking to target. So yeah, I mean, it makes sense. GU is looking super, super nice right now. It's honestly making me tempted to trade it because I just trade EU. But yeah, anyways, guys, I hope that helped. That was just a quick review, and hopefully that clarified as to why they took the trades that they did. And again, it was like a 24, 25R, yeah, 24R from the target. So yeah, I hope that you guys got some value out of that, and I will chat to you guys soon. All right, have a great weekend, guys. Cheers.